The third lesson for Chapter 5 deals with dishonored checks and electronic banking. A check that a bank refuses to pay is called a dishonored check. A dishonored check by the bank because of insufficient funds, means not enough money in their account, is called a non-sufficient fund check. A non-sufficient fund check is also known as an NSF check. That is writing out a check and you don't have enough money in your account. Reasons why banks may dishonor checks is insufficient funds, just what we got done covering, and that again is illegal. The checks may be altered. Somebody might have changed some things on the check and it doesn't look right, so they refuse to pay it. And again, this is illegal. The signature of the person who signed the check does not match the one on the signature card on the bank, and that's called forgery, and again, that's illegal. The amounts written in figures and words don't agree. There's two different amounts. The check is post-dated, written for a later date, and the person who wrote the check has stopped payment on the check. So these are some reasons why a bank may dishonor a check. Money for dishonored checks may be collected at a later date. If not, it may be an expense to the business. Banks charge a handling fee for handling non-sufficient fund checks that have been previously accepted for deposit. For example, Delgado Web Service Bank charges a $40 fee for handling NSF checks. Delgado Web Services attempts to collect the $40 fee in addition to the amount of the dishonored check from the person or business that wrote the check. So if an individual writes a bad check, gives it to Delgado Web Service, they take it to the bank and try to deposit it, and it comes back. Delgado Web Service gets charged a fee for that, and they have to go back and get the amount of the check plus the fee from the person that wrote the check. When Delgado Web Services receives that check initially, it records a check as a debit to cash and deposits the check in the bank. Again, when the check is dishonored, the bank deducts the amount from the check plus the fee from Delgado's Web Service checking account. Doesn't really seem fair, but again, that's why it's important for a business to make sure that the people that write out checks can actually pay for it. Therefore, Delgado Web Services records a dishonored check as a cash payment transaction. For example, we have a couple of T accounts here. Our cash has a balance of $2,000 and our accounts receivable, Valley Landscaping, has a balance of $500. They owe us $500. We receive payment of $185. So accounts receivable is going to go down, cash is going to go up. We record this in our journal. We may have posted it. We're taking the checks to the bank. We find out that it is no good, that check that they wrote out. So now the bank is going to charge your business $185 plus a $40 fee for a total of $125 or $225. So we have to go as a business, go back to Valley Landscaping and try to get the check of $185 plus a $40 fee that the bank charged us. And so now Valley Landscaping will owe us additional $225 and our cash is going to go down by $225. We need to record this dishonored check on a check stub. We write the dishonored check in the heading Other. We'll write the total of the dishonored check in the amount column. This is the amount of the dishonored check plus the service fee. And then we're going to calculate and record the new subtotal. And then again, we'll leave this stub until it's time to write out the check. Journalizing a dishonored check, going through those T accounts we just looked at, received notice from the bank of a dishonored check from Valley Landscaping, $185 plus a $40 fee for a total of $225. Remember, we've already recorded that we received this $185 from Valley Landscaping. Now we've got to charge Valley Landscaping the initial $185 plus the fee because they gave us the bad check. So record this in our journal and we're going to write the date. We'll write the debit amounts, accounts receivable. We're going to increase the amount by $225, the amount of the bad check and the fee. And we're going to credit cash. We have to bring our cash down because the bank took that amount out of our account for the bad check. And then we write the source document. All of this would be explained on memorandum number 52. Another source of, or another way that you can make payments is through electronic fund transfer. And it's a computerized cash payment system that uses electronic impulses to transfer funds. You make an arrangement with the bank or with the vendors to transfer money electronically. You do not have to write out a check. So you know you're going to get your money if it's through EFT. Delgado Web Services does not use electronic fund transfer. However, one of their vendors use it to receive payments. The journal entry is the same as if the check is written. The only change is the source document for the transaction. It's a memorandum rather than a check. So here would be an example of electronic funds transfer to put in your journal. June 5th, paid cash on account using EFT. Remember, our accounts payable is going to go down and our cash is going down. We're paying on account. Nothing is new there. We write the date. We write the debit amounts to our accounts payable, debit, cash credit. And the only thing that's different is the source document is a memorandum because we are using electronic fund transfer rather than writing out a check. Debit card, we should be familiar with that. It's a bank card that automatically deducts the amount of a purchase from the checking account of the cardholder. When a purchase is made with a debit card, the amount of the purchase is automatically deducted from the checking account of the cardholder. And now you can see after looking at dishonored checks why businesses accept credit and debit cards over checks nowadays. By using a debit card, they know that they're going to get payment because it's taken out of your account right away. Journalizing a debit card transaction, purchase supplies, $75 using a debit card. And again, when we normally purchase supplies, we wrote out a check, but since we're using a debit card, this will all be explained in a memorandum. Our supplies is going up, our cash is going down. So we write the date, we write the title, what is debited. And again, this should look familiar to you. Record the amount credit cash, and our source document again is memorandum 21 because we used a debit card rather than a check. Next, you can go through and complete your work together.